What's going on, everyone? Happy New Year. Welcome back to another video. Today we're going to be answering everything you asked about the IB by rejection and London 50 strategy. Before we get into the video today, this is going to be the 2026 goal for myself as well as the community. We're going to be tracking all the payouts. I'm aiming for 180,000 personally. That'll be about 15,000 per month. As for the community, we're just going to see how many we can rack in. We're a mixture of beginners as well as people that are already getting payouts. If you want to jump in on that, click the link down in the description. By far the most asked question that I've been getting, whether it's on Twitter or YouTube, is the win rate. Most of the comments are just like this one you see here. I backtested this on NQ, doesn't work, don't fall for this trap. So I'm just going to show my stats for December. This is pretty much just trading the IB and London 50. Now, I did have maybe 3 or 4 trades during Asia session on these accounts, so subject to error there. Total P&L 2,196 for the month of December, 62% win rate. If you're just taking a look at the win rate, you're missing out on a whole slew of things with trading. Profit factor and your risk reward are arguably more important than your win rate. The profit factor stands for how much you make for every dollar that you lose. You want this to be positive. If it's not positive, then you are not a profitable trader. The next one, average win compared to the average loss, otherwise known as your risk reward, that should be positive. It doesn't need to be massively positive. You're not going to get 2, 3 RR. That's not all that common. As long as that is over 1 and your win rate is over 55%, you're going to be a profitable trader. Now, most of the trades I take, these are on my Tradeify accounts, are 2 to 4 MNQ. The average trade length, you can see average trade duration, 12 minutes, 3 seconds, 14 minutes, 7 seconds for the average win, 8 minutes, 41 seconds for the average loss. Positive RR, trade direction, not really that directional. I do long, slightly more often. For these trades, they're pretty much all 10:25 to 11 o'clock, 12 o'clock, depends on when the IB breaks or the London 50 has a formation on the 15-minute. Most of my trades are going to be around that 15-minute time frame because I trade on the 15-minute chart. Now, going back up to that profit factor and your risk reward, you can trade off a negative risk reward for a much higher percent win rate. Now, again, this is just for the month of December. December was pretty rough for price action. It was pretty difficult, especially the last 2 weeks on the IB strategy. But a 62% win rate with a 1.07 RR on average, and the profit factor tells you all you need to see, 1.74, meaning that every dollar that I lose, I make $1.74 back. Do not focus in on the win rate. You're missing out on the risk reward. If you have a higher risk reward, you can have a much lower win rate. I've seen people that have 32 to 35% win rates, but they have a 2 to 3 risk reward, and vice versa. I've seen people like Trader Ike on social media. If you haven't seen him, go check him out. He has probably a 0.6 to 0.7 risk reward, meaning that he has a negative risk reward, but his win rate is up in the 85 to 90 percentile. The next most asked question has to do with timing. This also ties in with the win rate. So I'm going to explain what the IB as well as the IB 50 entry model is, as well as going over the London 50 real quick, maybe even cover a few previous day 50 entries. To start off, the initial balance by rejection strategy has about a 73% win rate, or a 73% chance of happening on any given day, depending on which high or low is formed first. Again, that is what level you're targeting. The IB50 is not a stat on Edgeful. They did just add it recently, but it doesn't have any data quite yet. The stat itself is my own discovery. So the IB by rejection, you're looking for either a break of the low or a break of the high, depending on whether the high or the low is formed first. Wednesday, December 31st, great example. We had the high form first right at open, and then we had the low form at 10:15. As you can see, we never got back to IB50. That's the best entry model there is for the strategy, but you can take the trade without it running to 50%. All that does for you is it skews what your risk reward is. So if I want to take a short, let's say I enter right at 1030, I'm targeting the IB low, and my stop loss, really put it wherever you want. You can put it just above the IB 50. Realistically, the invalidation for the strategy is going to be a break of the IB high. So that's a negative risk reward. You're getting 2 risk for 1 reward. Ideally, you get a retracement up to 50%. If you're just looking for 50%, you missed Wednesday. I missed Wednesday. I didn't take it. I wasn't really trading on any funded accounts. I was just trading on some evals. Tuesday was a great example of how it skews in the opposing direction, meaning that you get a much better risk reward. Tuesday, it's a little difficult to see, but you just have to take my word for it. We formed the low first, and then on that same 9:45, 10 o'clock candle, we formed the high. Given the stats, IB low formed first, 73% chance that we go and take the high. This is over 6 months, by the way. Go back over this chart, and you can see we went a whole lot lower than 50% of the IB. Again, I did not take this because I got a little emotions. I had a human emotion added into the trade. I thought for sure we were going to go down and take the low. However, we ended up pivoting all the way back up and taking the IB high, and then ended up taking a double break in the IB for that day as well. But what this does, and as we just covered on this Wednesday's trade, you were in for 2 risk, 1 reward. The day before Tuesday, if we had taken that long position right at that 10:30 close, we had a 4 reward or a 4 RR, 4.6 R on that trade, meaning that for 1 risk, we're expecting a reward of 4.68, and that's exactly what happened. You don't always need to enter at 50% of the IB. What you should do, and what I've been doing with the strategy for the past 6 months to 7 months, is just targeting the high or the low break. You don't need to always enter at 50%. Some days you're going to miss the entry. Some days you're going to get the entry. Monday, December 29th, this was a great example of that IB 50 working out perfectly. I entered right at 50% or just below, and then I re-entered. I got another entry or added into the position at 621.25. Ended up getting out for a 70-point gain on the drop that happened on the 10:45 candle. So I did not hold it for the full continuation to the IB low. But again, that is telling you that since the high formed first, we're targeting the IB low first break. IB low right there. It's telling you that about 3 out of 4 days this strategy should work. Now, I know in the last video I covered trying to enter at 50% of the IB. The reason being, it just helps your risk reward. You don't always need to enter at 50%. You should be targeting either the high or the low. Most days, you get a retracement before 10:30. So I want to add that in as well to the timing question. I'll go back here real quick. Most of these questions were, I entered right at 10:30 or entered after 10:30. When do you enter? When do you enter? I front run it up to 7 minutes. So I will enter this trade at 10:23 or later. I will enter all the way up to 10:30, sometimes even after 10:30. And then I'm looking for whatever stat is expected to break. Now again, sometimes I enter it at 25% retracement, meaning that my risk reward is 1 to 3 or 1 to 4 even. Sometimes I enter it all the way down here where my risk reward will be 1 risk for 4 reward. Obviously, I didn't take that, as I just said, on Monday, but it would have worked out perfectly. This strategy isn't as mechanical as it may sound, or it may be played out to be. There are some other influences and factors that go into the strategy. So Tuesday, another reason that you might have lost on this. Tuesday, as we can see, December 23rd, we formed the high first, meaning that we should have targeted the low breaking, and then we ended up going and taking the IB high. It would have just been a loss had we not also factored in that SPY, if we go and look at Tuesday, SPY did not go and take a new IB low. So this is the same trading day right here. This is something that I missed, and I did end up taking a loss on Tuesday. These two need to line up. SPY and Qs need to line up, or else you're going to have divergence on the charts. One of them is going to be a winner, one of them is going to be a loser. In this case, Q's ended up losing. SPY dragged it up and continued to push up. Q's, even though stats were telling us that we should have gone and taken the IB low, ended up being a 20% trade or a 1 in 5 outcome. For anyone that might be questioning the win rate on it or wondering why I might not have been as successful as it made out to be in the video, add confluences to the strategy. So the IB by rejection, the IB 50 entering the IB, that alone should be a 73% win rate. You're going to lose 1 out of 4 trades on it. Sometimes you're going to go in streaks of losing, like December. That wasn't a very good month to take the IB trades, but over the past 6 months, this is what the strategy has yielded. What you can add in is the London 50, which we did get some questions on this in the last video as well. London 50 adds several entry confluences to your strategy. You can do it on SPY, you can do it on QQQ. As you can see, SPY, Tuesday, December 23rd. If I was targeting a continuation lower, I could have slapped the London 50 on and been, hey, we might get a continuation higher off this actually because we just hit London 50. London 50, for those that don't know, even for those of you that do know, the London 50 is any high or low made during pre-market session for New York. I know it's not the actual London session, but I just gave it the name London 50. So 4 a.m. to that 9:15 15-minute candle or the 9:30 open. Any high or low made in that time frame, you mark the high, mark the low, using the gone box or fib retracement, whatever you want to use to get 50%. Mark out 50% and then look for entries off of that London 50. And then you also slap that on with the initial balance, and that doubles your confluence. It should add an additional win rate to your trading strategy. In this case, it would have worked out perfectly for Tuesday. And then you can do the same thing with previous day's 50. Previous day's 50 is the range 4 a.m. to that 8 p.m. close. That's EST, any high or low made in that time frame. For Monday, December 22nd, our low was made right at 4 a.m. and our high was made, looks like, at 12:45. Drag that out to the right, and you can take entries off previous day's 50 pre-market. You can take entries off previous day's high or previous day's low. I like to take sweep entries, meaning that the candle sweeps over previous day's high or previous day's low, and then look for the candle to either make a wick and close under. This is on the 15-minute time frame, or look for the candle to just have a continuation. The next most asked question on all of my trading strategies, all my videos, pretty much every tweet that I have on X, passing accounts. How long does it take? How do I do it? Am I aiming for $50 a day? Am I aiming for $140 a day? It's dependent on what you're offered in the market. It's also dependent on your financial situation. If you're able to size up more than you should on evals because you're trying to pass them faster, that's your strategy. What I aim for is passing the accounts in less than a month. For Lucid, and this is why I recommend Lucid for everyone, Lucid trading has a one-time payment. 25K account, 50K account, whatever account you get, whether it's the Flex, the Pro, instant funded, it's a one-time payment. So you have absolutely no rush in passing the account. For Apex accounts, I got the recent promotion at 90% off, so I was just aiming to pass them in less than a month. I trade a little riskier on them than I should have. It's the same strategy that I'm taking every day, though. Instead of trading 1 to 2 MNQ, which I would do on a funded, I trade 2, maybe even all the way up to 6 or even 8 MNQ. The reason being, I'm just pushing to get to the funded account. Now, if you're in a weaker financial situation, go over to Lucid. It's a one-time payment and pass the account when you pass it. There's absolutely no rush in passing the account. Even if you're not in a weak financial situation, I still say pass the account when you pass it. There's no reason to go and rush. There's no reason to size up. Copy trade over those accounts the same that you would on a funded. Pass them when you pass them. Another commonly asked question, I did miss some screenshots here, is copy trading. what do I do for copy trading on the accounts? The first platform that I use is Project X. I use this on both Tradeify and Lucid. You go over to Project X, you go to Settings, Copy Trading, and these are how you highlight your accounts. You have 1 leader account, 4 followers. For Tradeivate, and these are where I trade the Apex accounts, you go over into the top right application settings, go into add-ons, scroll all the way down to group trade, and this is free with Apex. I haven't used it with Take Profit Trader quite yet. This should be free. I use the built-in free copy trading platforms on both Tradeivate and Project X. I don't use TradeSyncer. I probably will eventually, but for now I just have 2 different tabs open. That's it. Lastly, and again, I did miss some screenshots on this question, charting. Why do I chart on QQQ as opposed to charting on MNQ and NQ? Now, there might not be any exact explanation for this. This is just how I discovered most of the strategies that I use. The main reason that I use QQQ to chart, it's universal. MNQ and NQ, sometimes if you go on these charts, they have slippage. MNQ doesn't look like QQQ, MNQ doesn't look like NQ. The same can be said if you're going over to chart MGC or if you're going over to chart gold. Sometimes the charts don't look the same. Now, they should look the same, but what I mean by this, I'm sure if you've been trading long enough, you know exactly what I'm talking about. MNQ might have made a slightly higher wick than NQ, and the same can be said for going over to QQQ. The reason that I use Qs is because it simplifies everything down. It's what I found in what I've always charted on for the London 50. It keeps it nice and simple with that 4 a.m. to 9:30 open. That's pre-market, as well as after hours is 4 o'clock to 8 o'clock p.m. EST. If I go over and chart on MNQ, there's not really any break in time frames. The only one that is active on the chart is going to be your 8 p.m. open or your 6 p.m. open, depending on where you are, for Glopex, as well as your 5 p.m. or 5:30 p.m. close. Otherwise, this chart trades 24 hours or 22 hours a day. Charting on QQQ, it just simplifies everything down. I do the same thing on gold as well. Instead of charting on GLD, instead of charting on GC, I chart on GLD. It's the same thing. And if you didn't know, SPY is the same as ES. QQQ is the same as MNQ or NQ. GLD, same as GC. And then RTY, that is the same as IWM. So I just go and chart on these. I think there's less slippage. There's less room for error on the charts. It just simplifies everything down. And that's it. If you guys didn't get your question answered, drop it in the comments and I will try to answer each and every one. Something that I would like to add on to the video is making sure that you have a data provider. And I am partnered with Edgeful, so there might be a little bias here, but this has removed a significant amount of emotion as well as just failure in general from my trading. This adds an additional confluence onto everything that I trade. Every single morning I come in here, I look at the gap fill by size. This tells me the chance that we're going to have a gap fill for the day. So if we're trending up or down pre-market, this tells me, am I going to be stupid and try to reverse it, or am I going to look for a continuation? The next thing that I go and do is look at inside bars, and this is probably one of the better reports on Edgeful. Tells you whether or not we're going to break out of the previous day's range or if we're going to stay within it. If price opens outside of previous day's range, this stat does not apply. If price opens inside of previous day's range, then that gives a pretty significant draw to previous day's high or previous day's low. Just something to add into your trading strategy. I'll drop the link for them in the description as well. Lastly, if you guys did enjoy the video and you want to become a part of the community, I'm going to drop that in the description as well. We're going to be aiming for pretty much just an infinite amount of payouts this year, see how much we can get to in 2026. Personal amount for me is going to be $15,000 a month or $180,000 for the end of the year. If you guys enjoyed the video, thank you for sticking around this long. drop a like, subscribe. I'll see you next week for another video.